By the end of this video, you're going to recognize the hidden mechanism underneath your worst trading days. Not the obvious stuff, not bad entries or the market was choppy. I mean the invisible pattern, the one that keeps repeating even when you change strategies, change indicators, change markets, and swear you'll never do it again. And once you see it clearly, you'll know exactly what needs to change. Let's start here. The people who get pulled into trading are rarely average in how they live their lives. They're not passive. They're not indifferent. They're not the type to sit around hoping life works out. They're usually driven. They're competitive. They're the ones who take responsibility. They're the ones who figure it out. In school, they learned a simple equation early. Effort creates results. Study harder, get better grades. Practice more, get better at the sport. Work longer, get the promotion. Take the risk, build the business. Say yes to pressure, and eventually pressure turns into strength. These are high achievers, and I want you to understand something clearly. That mindset is not wrong. In most areas of life, it's the most reliable operating system you can have. If you're disciplined, you usually win. If you prepare, you usually outperform. If you push through obstacles, the obstacle usually breaks. That's how careers work, that's how sports work, that's how school works, that's how business works. And that pattern gets reinforced for years until it becomes part of your identity. You don't just do hard things. You are the kind of person who does hard things. You don't just solve problems. You are the kind of person who solves problems. You don't just get results. You are the kind of person who gets results. Then you step into the market, and the market does not care. It doesn't care how driven you are. It doesn't care how intelligent you are. It doesn't care how much you want it. It doesn't care how much you studied. It doesn't care that you deserve a win because you've had a tough week. It doesn't care that you're usually right in other areas of life. The market moves for its own reasons, reasons that are larger than you, indifferent to you, and often completely invisible to you in real time. And this is where the trap begins. Because the high achiever looks at the market and assumes it's like everything else. They assume the same rules apply. They assume that if they push harder, they'll bend the outcome. If they analyze more, they'll find certainty. If they focus more, they'll avoid pain. If they stay in control, they'll be safe. But trading is not a domain where effort guarantees outcome. And that mismatch between what you've been rewarded for your whole life and what the market actually rewards is where so many traders break. Not because they're weak, because they're wired for a different kind of game. Let me paint you a picture. A trader is sitting at their desk. They took a setup that made sense. It was on their plan. They entered clean. They even felt good about it. Then the position ticks against them. It's not catastrophic. It's not even unusual. It's just not going their way. And immediately, something subtle changes in their body. A tightening in the chest, a slight clench in the jaw, a restless energy in the hands, a sudden need to do something. They lean closer to the screen. They start searching. They open another chart. They flip to a lower time frame. They add another indicator. They check volume confirmation. They check the news feed. They scan social media. They read someone's opinion. They pull up correlation markets. They watch the level. They watch the tape. They watch the candle form like it owes them an explanation. And they tell themselves they're being responsible. They tell themselves they're being analytical. They tell themselves they're managing the trade. But most of the time, what they're really doing is trying to manage the feeling. They're not solving the market. They're soothing the nervous system. Because deep down, there's an old belief firing automatically. If I just find the right information, I can control what happens next. That belief is powerful, and it's usually rewarded in normal life. But in trading, it becomes toxic. Because here is the uncomfortable truth that changes everything. You cannot control what the market does next. Not through intelligence, not through effort, not through willpower, not through emotion, not through needing it, not through watching harder, not through being right. The next tick is not negotiable. The next candle does not respond to your anxiety. The market does not know you're in a trade. It doesn't know you moved your stop. It doesn't know you're trying to make rent. It doesn't know you promised yourself you'd be disciplined today. It doesn't know you're one win away from breaking even. It doesn't know you're having a bad month and you need a turnaround. It is indifferent. And I want you to understand that indifference is not cruel. It's not personal. It's just reality. And once you stop fighting that reality, trading gets cleaner. But most traders don't stop fighting it. They accept it intellectually, but not emotionally. They can say the words, anything can happen. I don't know what the market will do. Losses are part of the game. But then the trade goes against them and the old wiring takes over. The control impulse activates. The high achiever inside them stands up and says, no, this is a problem. Fix it. And that's where the worst days begin. When a trader is trying to control the outcome, you'll see the same behaviors again and again. First, they hold the loser longer than planned, because closing the trade means making the loss real. It means admitting, I was wrong. And for a high achiever, wrong doesn't feel like a normal event. It feels like a threat. So instead of following the stop, they negotiate with the market. They give it more room. They widen the stop temporarily. They tell themselves they're avoiding getting wicked out. They tell themselves the level still matters. They tell themselves to just let it breathe. But beneath those explanations is a deeper motive. They're trying to avoid the emotional consequence of accepting the loss. Second, they start adjusting rules mid-trade. The plan was clear before the entry, but now, because pain is present, the plan suddenly seems flexible. They move targets. They rationalize. They reinterpret the setup. They shift from, this is my system, to, let me just manage this one differently. And the reason this is dangerous is simple. If your rules change under pressure, you don't have rules. You have preferences. Third, they average down or add to a losing position. This is one of the most seductive forms of control because it creates the illusion of taking action. It creates the illusion of intelligence. It creates the illusion of improving the position. And sometimes it even works, which makes it even more dangerous because the brain learns the wrong lesson. When I feel pain, if I increase risk, I can erase the pain. That is how accounts get blown up. Not in one dramatic moment, but through a pattern that slowly rewires your relationship with risk. Fourth, they overanalyze. They start hunting for certainty that doesn't exist. They change time frames, they stack indicators, they search for confirmation. They look for something, anything that will allow them to feel safe staying in the trade. And what looks like analysis is often anxiety wearing the mask of responsibility. Now here's the belief underneath all of these behaviors. If I try hard enough, I can make this work. That belief built your success in other domains, but in trading, that belief turns into self-destruction. Because when the market proves you wrong, and it will, regularly, even if you're a profitable trader, your mind doesn't just register a financial loss, it registers something deeper. It registers a personal failure. And that's where trading becomes psychologically expensive. Most trading education barely touches this, but it matters more than almost anything else. For a high achiever, a loss is rarely just a loss. It's an identity event. If your entire self-image has been built on, I figure things out, and I get results, and I win because I work harder, then a losing trade doesn't just reduce your account balance, it threatens the story of who you are. And when identity feels threatened, the nervous system reacts like survival is at stake. This is why the emotion is disproportionate. This is why it doesn't feel like, oh well, cost of doing business. It feels hot. It feels personal. It feels humiliating. It feels like you're exposed. It feels like you've been caught. And then comes the internal sequence that wrecks so many traders. First comes shame. Not always loud shame, often quiet shame. The kind that doesn't show up as words, but as a sinking feeling, a heaviness, a desire to hide the mistake from yourself. Then comes anger. Anger at the market, anger at your execution, anger at the stupid wick, anger at the news, anger at the randomness, anger that you were right and it still didn't pay you. And then, this is the critical moment, comes the urge to fix it immediately. Not later, not after reflection, not after resetting, now, right now. Because as long as the loss exists, the identity threat exists, and the high achiever's brain does not like unresolved threats. So it tries to resolve the threat the only way it knows, by taking action, by forcing a correction, by getting back what was taken. And this is revenge trading. And revenge trading is rarely about money. It's about self-respect. It's about restoring the internal image of, I'm good at this. It's about proving immediately that the loss was a glitch, not a truth. It's about escaping the feeling of being the kind of person who loses. So the trader takes another trade too quickly. They enter without patience. They enter without clarity.